Hi there, this is Jim Ducharme. I'm Chief Operating Officer and General Manager for RSA's Fraud and Risk Intelligence Division. And unfortunately, I'm here to tell you that your fraud metrics suck. But seriously, I want to have a discussion today about how to best present fraud metrics to a line of business. So my session here at RSA Conference is Your Fraud Metrics Sucks. You're losing money and the C-suite's ignoring you. So now what do we do? So again, today we'll go through some tips and tricks for how to make sure that your fraud metrics are making the most impact to your business and helping you achieve better results within your fraud organization. So this presentation really is geared towards folks that work in a fraud department inside of a banking institution, some sort of a financial institution. And your job is largely, historically, has been to stop the bad guys from stealing money from your customers. Typically, we've got a fraud team that's largely focused on again, stopping fraud in its tracks. That may be through things like doing wire transfers, peer-to-peer payments, card not present credit card transactions, things like that. Anywhere that you see money going from one place to the next. And your goal is to make sure that those transactions are legitimate and stopping fraud historically. So you're worried about metrics like fraud detection rates, looking at false positives, you're looking at account lockouts, privacy issues, compliance issues, and even on the security side, you may be looking at things like DDoS attack or SLAs around performance of your infrastructure, different types of events as we see there, or the time it takes you to respond to an incident, or even in a fraud management team, how deep your case management queues are getting when dealing with suspected fraud. All these things are really important as operational controls within a fraud team. But we tend to find with our customers, when a fraud team is reporting these types of metrics out of the organization, people's eyes glaze over and they sit there and they really don't understand a lot of the metrics, because as we look at the business focus, they're speaking a completely different language. When we talk about the business focus, what they care about is, what is the customer experience? What do they think about our brand, right? So for example, you may hear things like, when things go bad, you think about, oh, that's because we have a high rate of fraud or a high rate of step-up notifications going to our customers. What the business thinks about is, oh my God, we're getting killed in Twitter right now. Look at all the bad tweets about us. Look at all the mean tweets about us. What they care about from a customer experience is making sure it's frictionless. These are valuable customers and we want them to do business with us. So anytime a customer hits friction, that results in a mean tweet. And then finally, retention, right? We want to keep our customers. We want to keep them happy and we want to keep them using our service. Next, speed to market. As a financial institution, you're always looking for ways to innovate, get your customers to make it easier to move their money, spend their money, do business with us. It needs to align with the business and our objectives as a financial institution to, whether it's lend money, let people borrow money, transfer money, pay their parents, whatever it may be. It's important that we understand how these things relate to our business objectives as a financial institution. And likewise, look for new ways, new revenue streams. So whether it's new forms of peer-to-peer payment, digital currency, easier ways to transfer money to a friend or a colleague, pay for dinner, that sort of thing. And lastly, we need to make sure that it's cost effective, right? So they look at what is the cost of all of this fraud management, or even the infrastructure necessary to run our fraud operations, or even our line of business around this. So essentially, I've gone through a number of very different perspectives here that we typically see from a fraud team, really focused on a lot of the operating controls that are aimed at stopping fraud, stopping us from losing money, to the business, who really is more focused on how do we accelerate our business? How do we make sure our customers love us? How do we make sure those tweets online are all positive? So what we need to do is figure out how we bridge the gap of this communication between them. How do we have an effective means of communication between a fraud team and the people in the business? So a couple of tricks of the trade. How do we maximize our metrics as we communicate out of a fraud organization? First and foremost, we need to stop being viewed as a cost center. So while I put the emphasis in the previous slide around things like operational controls around fraud detection and fraud management. So for example, how many suspect fraud incidents have we seen? What is the dollar amount associated with known fraud? We need to also, those are important metrics, but we also need to think about, again, that impact to the customer. How can we be viewed as ways to reduce frictions on customers to drive more business? Let me be clear on that. When you, even in your personal life, go shopping and you open up your wallet or your purse to go pay for something and you're going to use a credit card, you might have multiple credit cards in your wallet or purse. Which card are you going to pull out? The card that declines you the most because it suspects potential fraud because you're traveling, or the one that reduces friction on you, the one that's easiest to use? Of course, you're going to use the easiest one. So when we think about fraud management, it's not just about stopping the bad guys, but it's about putting in technologies and capabilities that allow our legitimate customers to spend their money, to transfer their money as easy as humanly possible. So don't just think about the metrics that are about stopping bad guys. They are important, but you also need to think about metrics that are viewed as positive indicators of business. So how many customers did we allow to transact? So when we think about that, don't just think about the fraud rates or the amount of fraud that we saw in the past quarter, month, quarter, year, whatever it may be, but also make sure that we're communicating the positive impacts of the fraud center on the business. How many positive, frictionless experiences did we make sure that our customers had when using our financial services? Next, remember what I like to call the CNN headlines. I've seen way too many presentations from fraud teams to a business that was filled with 1,000,001 metrics, tons of data. I've seen these very complicated graphs being shown that show the coefficient of friction or fraud over time as it relates to dollar amount and location, and your head wants to explode. So one of the things I like to say when I'm viewing these presentations is I go, what's your point? That to me is a CNN headline. How I do this, I say, okay, after you're done presenting that slide or that information to your listeners, imagine they got up out of the room and walked out, and there was a CNN reporter on the outside and said, so you came out of the presentation, what did you hear? What do you want them to say? After you're done, what do you want them to go out and tell that CNN reporter about what they heard about your presentation? Start with that. Write your own CNN headlines of, I want them to know that the technologies that we've put into place have really helped provide a frictionless experience for our customers and are driving business results for our bank. Maybe that's your CNN headline. Maybe your CNN headline is, look, we don't have enough money to fight fraud. It's taking too, our customers are pissed off because we're declining their transactions too much because we haven't put the necessary controls into place to really detect the good guys from the bad guys. So always write your CNN headlines. And then once you've written your CNN headlines, build your content around that. How important is that metric? Is that piece of information critical to telling that headline story? If you can't relate that piece of data to that headline, leave it out. Okay. This is not a battle of how many metrics can you show somebody. It really comes down to how you can be most effective at telling the story that you want to tell. Okay? So that's my CNN headline was. Next, drive investment in your fraud programs with actionable insights. So when we think about the data that we're going to show and our CNN headlines, are we trying to drive any sort of change with how we want to operate? Are we looking to gain new investment in additional technologies or new practices, new policies, or new people to help us in this fight against fraud and reducing friction for our legitimate customers? So when you think about your CNN headlines, maybe that is, we need to invest more in digital identity, for example, to reduce friction for our customers. Think about how you create actionable insights out of the data. So for example, if we do want to, for example, try to promote an investment in, say, digital identity technologies, what we might do is show some metrics around what we call intervention rates, which is how many times are we causing our legitimate customers to step up, do a step-up authentication to prove they are who they say they are, only to complete their transaction. So remember, these are legitimate transactions that we cause the user to have to do something, whether it's respond to an OTP, we may have even had to call them, but it's friction we introduced in the transaction to help them move their money. And maybe we say, look at the rate of interaction of step-up authentication that we had to have with these customers in their legitimate transactions. If we made an investment in some, for example, digital identity solutions, we could lower that intervention rate, resulting in happier customers and more business. Okay, and to do that, this is the investment that we need. Okay, so let's dive a little bit deeper into that one for 1 second. How do we do that? So how do we do that effectively, right? A lot of times what I see in these presentations is what I call, there's a bunch of what's on the page, a bunch of metrics. So I call those the what's. My fraud detection rate, my number of step-up authentications last month, how many fraudulent transactions happen, how many legitimate, those are all the what. You got to think about well, who cares about that? And now what? Or sometimes what I like to call here's the what, now what's the so what, and then now what, okay? So when you think about the so what, so what's the big deal about the intervention rate being high? Is it high? You have to help your listeners understand, is that number good or bad? Is that what we want it to be? So there's a what that you show them. Our step-up authentication rate of transactions is at 14%. Is that good? Is that bad? And that is not good. We want to strive to get an intervention rate of under 5%. So first of all, I've established what good looks like. Intervention rates should be less than 5%, ideally even less than 2%. We're running at 14%. That's bad, okay? So there's a bit of a so what there. Make sure that you have the now what. Okay, so how do we fix it? That is your opportunity with the now what to drive interest in investments, in new controls, process changes, people, to get that investment to improve that number from 14% to under 5. And again, make sure that you're communicating, what you're just by making that investment. Our goal is to get that from 14 to 5. Set a target, okay? Very simply in that way. Some other tricks on here, when it comes to help you think about how do we do the so what and the now what. The so what's can be around, is there something you can do that can help increase revenue? The business is gonna love it if you can tell them, look, by implementing this solution, we believe that will increase revenue. By reducing friction from 14% to 5%, our customers are going to be more apt to pull out our credit card than our competitors. Our customers are going to want to use our platform to manage their money. That means more money. That means our customers are happier, and we're getting more revenue due to transaction fees. Next, another idea is, again, for the so what, how does it help our customer? Again, we've talked about that, right? The frictionless experience. Quantify that, right? How do we reduce the burden on our customers, which again can lead to more revenue? Or lastly, in some cases, it could be operational expense, right? It's like, look, I can save the company a lot of money, whether it be in fraud losses or even operational expense, if we implement this piece. So those are just a couple examples that you can use in your so what part of your presentation around your metrics. The now what is obviously the actionable insights that you can drive out of that, the things that you want to promote to advance your fraud detection capabilities. So next, let's talk about a little bit what you should measure and how you should measure it. The graphic on the right, I think, is very important. I tend to have this printed out and I put it on my wall of when I'm doing this presentation. Did I check the box of all 4 of those areas? That sweet spot is right in the middle of that, and we'll go through that. So I like to start on the bottom right of those concentric circles. And the first thing is that they're transparent, simple calculations. They've got to be easy to understand. If you're showing things like coefficient of frictions and people, I don't even know what that means, or any ratios, things like that, they've got to be very simple. And in ways that anybody can understand. That's that common interpretation as well. Where I can say things rather than say we have a 4% intervention rate, What does that mean? That means for every 10,000 legitimate transactions, we have to tell a customer to prove their identity, 50 times. So how can you put it in a way that people are going to understand the customer impact or the revenue impact, something that the business can relate to? And remember, they're going to be thinking about the impact on their customer, the impact on their revenue, or the impact to their expenses for the most part. Maybe there's other things that they care about, but communicate it in ways that are simple to understand. Okay. Next, accessible and credible data. Too many times I see metrics put up that it diverts the conversation because everybody's got a different calculation around the same piece of data. So examples here are where people are computing them in different ways. And so you end up in a room arguing about well, is our intervention rate 14%, but that only applies to this part of the bank, or this number is too high, that excludes this. Make sure that the data is readily accessible by the people that are going to care about that, and it's credible, right? So there's an authoritative source of information that's readily accessible. The accessibility part is important as well, because if you're driving change, in other words, if you're trying to do that, I keep going back to that example of we're going to try to drive a 14% intervention rate or step-up authentication rate down to a less than 5%, you're going to need to measure that to show your progress towards that goal. So it can't be something of like, for example, I've seen people throw up things like, we want to improve net promoter score. So there's a calculation called NPS. Wonderful calculation of understanding your customer's propensity to do business with you again. But if you only measure NPS once a year, understand you're going to have to wait a year to see if what you've done has impact. I've seen companies that use NPS as a goal, but yet they only measure it every couple of years. Unless you want to measure success in years time frame, it's not a great way to set your presentation to be able to get investments to show that meaningful progress. You need to make those measures accessible and readily available so you can show that progress. And lastly, is actionable, right? So how can you define something to do that it's pretty clear that, oh, if I do these things, this metric will get better, right? So make sure that they're actionable. And so these are the criteria that I typically look at when I look at these metrics. So some examples are on the left of some things that you should measure. The first two are largely inside of a fraud team, and the second two relate to the business side. So the first is net fraud losses and avoidance. So these are quantifying things like, what is the dollar amount associated with a fraud that we're seeing? Put it in ways that the business understands. This is lost revenue, right? This is how much money was stolen out of our pockets due to missed fraud. Okay, so it's a very clear number. It's very transparent. It's accessible. It should be accessible, and everybody understands this is how much money the bad guys got away with. It's also can be actionable. This is where your action plan comes into play. It's like, okay, how do we reduce that? All right, we can put these controls into place, these processes into place to help avoid the circumstances that cause that type of fraud. Operational expenses is another one, right? So how can we make it easier with detected fraud for our fraud centers to deal with the cases? When a customer calls up and say, hey, you declined a transaction for me because of suspected fraud, but it was actually me. How do you deal with that? And what is the impact to your customer satisfaction? Revenue generation. So this is one where I think, here's a great example that I don't see a lot of fraud teams report on, is those positive impact to fraud detection, which is how many legitimate transactions went through without any sort of friction. We didn't have to step up the user. We had a good level of proof that the person is who they claim to be, so we didn't have to challenge them, and they were able to complete their transaction without any interruption in their flow. And lastly, related to that is the customer impact. These are probably the most valuable sorts of metrics that you can report on. And there are things like I mentioned, how many times does what's the percentage of frictionless transactions that we're allowing our customers to perform? And again, in very good fraud teams, we are seeing 95 to 98% frictionless experience for their end users. So again, it's just a benchmark that we see in really good fraud teams. But you can also do that in other ways if you're dealing with e-commerce transactions. If you're on the merchant side, right? Think about how long it takes for a user to check out. How much friction are we adding to the checkout experience is a direct correlation to how long the checkout experience is. The more that we can reduce that time, the easier the transaction is, the more apt a customer is going to do business with us again. And next, cart abandonment rates. If they're having trouble getting through the checkout experience, cart abandonment is the worst thing that you can have on a merchant side. Even many times, many merchants will say cart abandonment's worse than fraud at many times because I've just lost a customer, I've lost a sale, and friction can help encourage cart abandonment rates because customers are just like, this is just too hard. Okay, so let's go through a couple quick examples here to wrap this up. So the first is around card issuers. So these are credit card issuers, and the shift in focus in fraud teams from fraud detection to reducing friction. So card issuers really now are focused on how do we make sure that customers can transact with us as easily as humanly possible. There was a standard called 3D Secure 1.0 that was implemented, and you may have seen this in things like Verified by Visa, that when you're in a card not present transaction, i.e. you were shopping at Jim's Tackle Shop and buying some gear, and you go through the checkout experience, and these pop-ups would come up asking you to verify your identity and such. That was the 3D Secure 1.0 protocol. What we recognized in that protocol was that it was filled with friction on end users. So there is now a new standard called 3DS 2.0, 2.x, that is aimed at really reducing that friction, but improving fraud detection rates as well. So with 3DS2, we're shifting our focus from how much fraud do we detect to how do we ensure a frictionless experience for card not present credit card transactions, right? In order to get there, we really had to make had to have an understanding of how transaction declines and even the friction that we experienced in legitimate transaction impacted our customers' NPS. And when I say customers, I mean the credit card issuers' customers. So again, we had card issuers that were using some of these protocols and high friction in the checkout experience, and they were seeing card usage go down because there was an easier card in their wallet that they preferred to use. So many of the card issuers that we deal with today, really when they come to us to help them with their fraud solutions, yes, we have to talk about fraud detection rates, but more importantly, we're talking more about how do we help them reduce friction on their end users to have a competitive advantage against other card issuers. Okay, next, learned false positives. We had to learn that false positives ruin customer trust. So for example, when you're in a checkout experience and it declines your card for suspected fraud, and then you get a notification from their fraud team that says, hey, we think it was fraud. I'm like, no, that was me. That was actually me. Why did you decline my card? That erodes your customer's confidence that your security controls, your fraud controls are effective. So understand that relationship between, don't just understand, this is how many false positives we had, but translate that into the impact on your end user customers. Okay. And lastly, the other thing that we saw in these days of 3DS 1.0 and poor fraud detection rates was that the fraud analyst teams, those people that are making the phone calls to the card holders to say, hey, we suspected fraud. These fraud teams were completely overwhelmed by those calls, by those cases in dealing with their end customers. Again, another example where it hurts your customers' confidence in you, as well as reduces your revenue, reduces the chance they're going to use your card again, and is not helping you actually fight fraud or increase revenue. So here, when our customers look at this, the conversation around metrics and reporting up out of fraud organizations becomes much more about the percentage of transactions that are frictionless, and therefore resulting in a positive user experience. Okay, and many good fraud organizations work collaboratively with the business to actually quantify that friction experience into how many card transactions have we done, what is the revenue associated with those transactions, how much money are our customers flowing. And we want to see the direct correlation of this technology around frictionless fraud detection with growing usage of cards or the banking services. Okay. Nice segue to creating what we call fusion centers. So as a fraud organization, you've got limited insights to metrics, but the more that you can reach out beyond the borders of the fraud management team to lines of the business, even to your SOC, what have you, you can start to now collaborate with them on the true business impact of the work that you're doing. Again, like I mentioned, where we've seen this successful is where customers are, our customers in the fraud management teams are taking some of their fraud detection rates, for example, and then working with the line of business to actually associate a dollar amount or look at the correlation between fraud detection or step-up authentications to card abandonment or to card usage itself. Are we seeing on average, are we seeing card users use their card more or less as we make these changes to our approaches to fraud management? Okay. Likewise, this can also go into better detection capabilities. What do I mean by that? So many times you have a fraud management team that might be focused in one channel of a bank. So for example, card not present transactions is one channel. Another channel might be money transfers within an online banking portal or a mobile banking portal or even in the branch. This approach to omni-channel, what we call omni-channel fraud detection, is also critical. What do I mean by that? If you have these silos of fraud detection within card not present, mobile, web, or branch, ATM channels in your business, sharing that intelligence about how fraud is happening, where fraud is happening, is vitally important. That way there, you can actually detect when a user is being targeted or there's a particular pattern of fraud happening. For example, there may be calls to a call center doing password resets over the phone, and then immediately followed by large transactions on a web portal. In isolation, these two events, a large transfer of money and a password reset, by themselves may not look suspicious. But when we see them close together, that could be an indicator of fraud, that somebody was able to not break through the web portal, but they were able to fool a call center employee into getting them access to giving a fraudster access to your web portal. So the more that you can share intelligence across these different silos of fraud management, or even across information from things like the call center to events like somebody just called in and changed a password on a web portal, the more that informs your fraud management team of your web channel team to detect fraudulent activities. Okay. And then finally, the better business insights really are those things where we can correlate these events to changes in business metrics, i.e. increased usage of cards, increased usage of our online portal, or the converse, right, where we're seeing it go down. How are these controls helping move our business positively or negatively? Okay. So just to wrap up, what should you do to now take what I've showed you today and be actionable? So much like my metrics, I want you to walk away with these CNN headlines and these actions to take when next time you go to report on your fraud metrics. So first of all, just take inventory of what you're reporting on today. Go through and apply the CNN headlines approach to it. Like, what do you want people to get out of that? Apply the so what, now what, the here's what, so what, now what, or the so what, who cares, now what factor to the metrics. Do people understand, is that good or bad? That's the so what. What's the impact to our customers? More so what. And then what do we do about it? Do we need to do something? So think about that aspect as well. But just over what you're doing today. and throw out those things that don't pass that either don't help you with the CNN headline, or really aren't actionable. They may be important, but if there's nothing you want to do about it, or if there's no so what to it, it's not useful. Okay, so assess what you're doing today. Next, for the first 3 months following this presentation, you should start to build that common language and objectives with the business and the fraud teams. Put your metrics aside for a minute and go talk to some of the people that you're presenting to across the lines of business in the bank. Go talk to the people that own the online portal for your banking business or your card processing division, and understand from them what makes them successful. What are their objectives? And you'll probably hear things like with card not present, like, look, when people are shopping online, we want to see that they're using our card more than competitors. We want to see growth. We see card not present or online shopping trends going in this direction. We want our card not present or our online shopping trends to outpace that of the industry. Understand, now think about, okay, how does my work in the fraud team help align with their business objectives? Okay, and follow on to that, develop your reporting metrics aligned with that, right? Start with what they care about as a business. Or again, you may even be looking across the channel to another fraud team in a different part of the bank, or maybe even to the SOC that's dealing with security incidents. Many times the SOC, the security incident team, the security operations center, and our fraud operations centers go hand in hand, and yet they don't talk enough. So reach across the aisle and look for those objectives, and then from that, start to evaluate a potential cross-channel or what we call omni-channel fusion centers. Have these groups that get together to share intelligence. Bring in the folks that, even where there's less technology involved, like maybe in an online call center where it's human talking to human, what sort of interactions on those call centers is helpful information to a fraud team? What information is useful from an ATM network perspective, a branch center, et cetera? Bring the SOC into the table and align, how we talk about growing the business and the roles we each have to play in doing that. And then lastly, this is more difficult to get, but analysts can help you with this, or even, your vendor should be able to help you with benchmarking against your peers. I have this conversation with our customers a lot where we share some of their metrics and they don't even know if they're good. I had one 2 weeks ago where they actually thought their fraud detection rates were very good. And when I can compare that to some of what we see as the best in class fraud detection rates, I can share with them not information about our other customers, but I can say, look, we see better. You should strive towards, you should not accept anything more than 5% intervention rate on your customers in a card not present transaction. You should expect greater than 95% fraud detection rates and low false positive rates. Those are meaningful things to your business. So hopefully you have a strategic relationship with your vendors that supply fraud detection capabilities to you that can help you understand how are we doing. So at this point, I hope this was helpful in helping you understand how to more effectively align with your business and communicate out the value that you bring as a fraud management team, and it will help you be more effective in driving growth in your technologies and your capabilities as well. I hope you found this useful. I hope it was interactive and we can continue the conversation online, and I look forward to speaking to you again soon. Thank you so much.